All right, good evening, traders. Today is February 27th, 2024. My name is John Kerrigan. I moderate the BYOB Trading Room. Just to let you know, we're having an open house today and tomorrow. Today's already passed, so tomorrow I open up the room at 8 o'clock and I do my morning market prep work where I prep traders for the upcoming day. So you're all invited to join us tomorrow morning at 8 o'clock in the morning. Also having a members, a not a members, but a workshop on Thursday, and it's going to be called. It is the title of the workshop is leveraging the 3/8 cross with short-term options. Now there's two prices, one for non-members, one for members. That's why we encourage you to be a member. Is you get discounts on some of our other products, as well as access to other learning material. So I want to thank everyone for being here tonight. This is a new take on market laws. I've just revamped it just a little bit. It's pretty much the same, but we'll run through it this evening, and then I will take questions until the questions stop coming. So a little bit about me. I've been trading with BYOB since March 1st, 2023. I've been doing quite well with it. I trade a demo account live in front of traders where you can see my trades and my executions live right in front of you. I kind of send people alerts on sidelines. You'll see them in the alerts up there on the upper left portion of your browser in the chat room. So you'll see my alerts that come in. And I like to trade a 10-minute chart. I'm a day trader. I'd like to trade the 10-minute uptrend or 10-minute downtrend that's either above VWAP or below VWAP. And I prefer to trade options. And my option of choice is one that expires on Friday because of the greater amount of open interest in the Friday options. So I choose my directional options to be traded on Fridays with their expiration on Fridays. That is okay. So and then I do spreads throughout the other 4 days of the week. Um, Mainly, I like to trade options on the SPY because they have options that expire every day, but I prefer the ones that expire on Friday because of the greater open interest. Not only that, the SPY is an ETF. That means it's made up of multiple different securities inside it. So uh, I'm not um, I'm not too vulnerable to big market moves because it's multiple products. It's not like there's times when economic data could come out and rip the the price action away from where I'm trading at, and that's one of them. And the other one is earnings. So I have to watch out for earnings and economic data. So those are the two things that I have to look out for. But other than that, it's very few surprises in the market because it's an ETF. Economic data is pretty much announced. When it's going to happen. Like tomorrow, we're going to have GDP in the morning at 8:30. So we'll see what happens with that. Now the dollar has been moving up, so we'll see how that affects GDP. I don't expect it to affect it all that much, but we'll see what it does because last month U.S. dollar index has been moving up. So we'll see how that affects the markets if it does at all. The other thing is earnings, and earnings are also announced long ahead of time. So as long as the big cap stocks, keep reporting their earnings right on time, there's pretty much very little surprises. So that's why I like trading ETFs. So let's get started, and we'll talk about first one. Let me get my PowerPoint up here, and let's see what we got here. Okay, see if I can go down. That's not working. Hold on, just bear with me. Let's try this. All right. Okay, so this is going to work right now. Okay. So again, my name's John Kerrigan. You can get this PowerPoint presentation if you just email me and ask me for it. I'll send it to you. This is my YouTube channel. I encourage you and invite you and would love it if you would stop by, subscribe, and hit the bell. And so you could be notified of any new videos that I post. I'm always posting new videos in addition to the market wrap up at the end of the day and the morning market analysis that I do at the beginning of every day. So let's try to take the next one. Okay, so I want to thank everyone for being here. Again, your time is valuable. This webinar is being recorded. It will likely be on my YouTube channel, and we will put links to it in our learning center. Again, the PowerPoint presentation is available. All you have to do is just email me. All right, so let's get this out of the way. Trading involves significant financial risks, not suitable for everyone. Okay, no communication from any of us here at Hit and Run Candlesticks, BYOB, Right Way Options, or its affiliates, representatives is intended. It is only intended for educational purposes only. You're advised to test any new approach prior to implementing it. Again, past performance does not guarantee future results. So mainly says just do your own due diligence. Okay, so now we're going to start off. We got market law number one. Okay, if you want to succeed in the markets, I suggest you trade in the direction of the market. Okay, so if your stock is in the SPY and the SPY is moving down, you might want a stock that is moving down as well. Okay, so trading with the direction of the market always works out a whole lot better. Pretty much the markets move in like a herd. When one moves to the right, you know, all the other ones kind of move to the right, especially when the leaders move to the right, like Apple, Google, Microsoft, Broadcom, NVIDIA, some of them, all right, when they're moving up, they will tend to drag the rest of the market up with it. Again, if your stock is a component of the QQQ and the QQQ is moving up, your stock is moving up, you will likely want to make long trades in that stock. Same way as if SPY is moving down and your stock is in the SPY and your stock is moving down, you'll likely want to make short trades or put trades in your stock. So that's market law number one. Trade in the direction of the market. Now you can trade against the direction of the market, but let me just say it does not work out well for many traders. There's a very short lifespan. For those of you that trade, or for those traders that did trade, and I'm going to say did because they don't last long, trade against the direction of the market, okay? So SPY, all right, no question about it, all right? All right here, we have an uptrend, right? There's no question about it there. Let me just pull up my chat window so we can see. All right, so would everybody agree that SPY is in an uptrend? Just a simple yes is good. That's fine. Yeah, okay. Now, how about QQQ, uptrend? Yes. Okay, so we have QQQ in an uptrend. We got SPY in an uptrend. Let's try the next one. How about SMH? You like that one? Uptrend, right? So I think about it, okay? If this group of SMH, QQQ, SPY, if the group is moving to the upside as a herd, I mean, because it's a group of them, all right? I mean, just one of them is not going to drag this up. It's going to take the whole herd to move in that direction to get SPY or SMH, QQQ to move in that upward direction, it's better that you trade with the direction of the market rather than against the ETF or the index itself. So let's try the next one. How about Diamond Dow uptrend, right? No question about that, right? Okay, so market law number 2, all right? Everyone agreed with market law number 1, trade with the direction of the market. Okay, market law number 2, trade in the direction of the current daily trend of the equity considered or the security considered. Okay, so if the daily trend is down and the market trend is down, we want to look for stocks or securities that are also trending down, right? We want to look for places where resistance has worked, and we want price to break through support and move down. That would be in the downward direction. Now, since all of the indices are moving up, we want signs of support holding and resistance failing. That's what we're looking for. Resistance to fail and support to work. So we want to find stocks that are strong and also moving in the upward direction. All right, so here's the first one. This is Tractor Supply. It's in the SPY. So here's Tractor Supply in the SPY, notice, and it's also moving up. Now, can you imagine shorting that? How well would you do shorting Tractor Supply? Not very well. It wouldn't last long, maybe about 5 or 6 days, and then that would be it. You'd be done. Okay, so try to work with, you'll have more luck and more success trading with the direction of the overall trend. Okay, so there's Tractor Supply in the SPY, trade in the direction of the current trend of the security considered. Tractor Supply is in an uptrend. When SPY is in an uptrend, we want to be buying this at showing us when buyers are stepping in, when price pulls back to support and buyers step in. That's when we want to buy that. Okay, there's CAT. Next one, CAT. CAT's in the Caterpillar. It's in the Diamond Dow. All right, notice we want to trade in the direction of the current trend. Okay, Diamond Dow is in an uptrend. CAT also in an uptrend. All right, see how well it works when you trade with the direction of the market, especially when you're doing 2 and 3 month options. You know, you can get stuck and then price rips right out to the upside if you're going to try to do puts. So there's CAT in an uptrend, trade in the direction of the current trend. The diamonds are also trading up, so we want CAT also trading up. This would be a nice product to trade right there. Let's try the next one. Broadcom. All right, notice Broadcom in an uptrend. All right, the bigger time frame in the daily. See all the green 17 EMA trend indicator dots? All green, price is moving up. All right, this works out better for traders when you trade with the direction of the current trend. Okay, let's try the next one. NVIDIA. Look at NVIDIA. Nice green trend indicator dots. Again, you got a little pullback here, but notice the overall trend carries NVIDIA up to make a higher high. Trade in the direction of the current trend. Market law number 3. The higher time frame takes precedence over the lower time frame. Okay, so you can have an uptrend, you can have a downtrend on a 5-minute chart and a downtrend on a 5-minute chart and an uptrend on the hourly chart. Okay, the higher time frame always rules. Right, so in our daily uptrends, all right, we could have pullbacks. So here's Tractor Supply. You can see 2 daily candles there pulling back. All right, so we have an hourly pullback. There's an hourly downtrend inside this daily uptrend. Okay, So what takes precedence? The daily uptrend. So this is a pullback presenting a buying opportunity, and all we're waiting for is buyers to step in. And here we get this green candle where green wipes out the red, and there's an opportunity right through here to jump into this as green wipes out the red candles right there. Hourly pullback. Remember, the larger time frame takes precedence over the smaller time frames. Okay, QQQ, hourly pullback. All right, so you got 5 days down, and what we got is on QQQ an uptrend. In the larger picture, we have QQQ is in an uptrend. You got an hourly pullback, and then what takes over? The daily time frame recovers, and you can see price action comes back up over these red candles as they pull back. You can see them breach right over the top there. There's your opportunity right on the top of that high. All right, market law number 4, failure to make a significant new high generally results in price making a significant new low. Now, this law applies to all time frames, and the reverse is also true. So let's take a look. Okay, so now here's Marvell. All right, Marvell makes a higher low right here, and yet we got a tweezer top almost, and it fails to make the higher high. Okay, failure to make the significant higher high results in what? Marvell making a lower low. See what happened here? Marvell failed to make a significant new high. Price made a lower low. Okay, there's an example. Failure. Okay, CAT. Here's one. CAT fails to make a higher high. Here's the high over here. CAT fails to make the higher high. What happens? Price makes a lower low. Okay. Same thing happens here. All right. Same thing happens here. Price comes down, makes a higher low. Fails to make the higher high. Can't even make the lower low, so we get a double bottom. And now you can see the price action reverses. Okay, reverses back up to challenge that high. And now you can see CAT working through the W pattern. This is how your W patterns are formed. You get the failure to make a significant new low, and now you get price action coming up to challenge the middle peak of the W pattern, or it could be an M pattern if the reverse was being used. So CAT, failure to make the significant new low results in price challenging the recent high. So CAT's looking for a W pattern that comes in and challenges the most recent all-time high up here. So there's CAT. Okay, market law number 5. The strength of the uptrend is measured by the time spent above the uptrend line. And on the flip side, the strength of the downtrend is measured by the time spent below the trend line. All right, so as you can see, we have a downtrend line. It's short in nature compared to the uptrend line. Notice the uptrend line encompasses more time. Okay, here's the downtrend line, encompasses less time than the uptrend line, and yet the uptrend line returns to move for a measured move to the upside. Okay, longer time in the uptrend results in a stronger trend. Okay, the uptrend line is stronger than the downtrend. Notice the downtrend only lasts for about a month, whereas the uptrend lasts for over a month and a half. Then the downtrend takes over, lasts for about a month or half a month, and then the uptrend resumes right there. Can you get a recording? Yes. I don't know if I can give you a recording, but it will be on my YouTube channel, all right? Or you can just email me, John at BYOB Trading.com. Okay, what about the stock? Rob asked, wait, Matt asked a question. Matt, okay, all trending northeast since the end of October, November, IWM. Yeah, IWM's up there as well. We'll take a look at it in a minute. Okay, what about the stock is in multiple indexes and one index is going up, the other's going down? Which one's going down, Rob? Which index is going down? Because I find it hard to believe that an index is going down right now. I'm just going to say, Rob, when you get a chance, give me an example. When it happens, I would take the overall direction of the SPY. Which index has more components to it? Okay, like which index has more components? Okay, well, the Russell 2000's got 2000, right? Okay, and then the SPY's got 500 and the QQQ's got 100. So I would use the more dominant, the one with more components within the index. It's if turn off the computer and watch the ball game. Yeah. Okay. I would tend to use the index with more components. Yeah. All right. So let's try the next slide. Okay. Market law number 6. The strength of the pivot high is measured by the time spent on both sides down to the recent low pivot on each side until that high is breached. On the reverse, the strength of the pivot low is measured by the time spent on both sides up to the recent highest pivot on each side until that low is breached. All right, let's go take a look at a slide. Okay, here is a pivot high right here. Here is a pivot high. Here is a pivot high. And this is a huge pivot high right there. Now, notice the time on each side of this pivot. Okay, nowhere near as much as the time on this side of this pivot. Okay, notice this pivot high gets breached relatively quickly within 2 or 3 weeks there. You see that? See how the pivot high is breached in almost no time at all. Okay, now when we get to this pivot high, notice the amount of consolidation. All right, from July through October, it takes us 4 to 5 months of consolidation before we're finally able to break this pivot high. Why? Because it has more time, on each side. Okay? See this pivot low? It has this much time on each side. Is it easy to break? It becomes easy to break because it has relatively little time on each side of it. See this pivot low? Becomes easy to break through. So the strength, so if you get to an all-time high, you can expect to waffle around for a while before finally getting through. Okay, so this is what you want to remember: the strength of the pivot high, the time spent above the trend line. Right, that's the strength of the trend. Notice it's the time spent in the uptrend is longer than the time spent in the downtrend. Pretty much. Am I right? Am I wrong? Let me see. This is from 2022 down to, well, we'll just call it basically 1 year there. And we are 1 year and going into 2 months. So this one is longer than this downtrend. This one is stronger. Okay. This is the time spent on each side of this pivot. Notice all of this time. So it takes us longer to breach it. See that? From July through October. Market law number 7. Equities have 3 major directions of movement. All right. Price spends 99% of its time moving in one of the 3 directions. They're either moving up, down, or consolidating sideways to the right of your chart. What about the last percent? Well, the other like 1% or 1/10%, all right, accounts for gapping, retiring, being acquired, splitting, and reverse splitting. All right. I like to trade SPY options because they're highly liquid. I prefer directional in the money by over 50% of the daily ATR. Calls and puts that expire on Friday because there's usually more open interest. More open interest translates into tighter bid-ask spreads. Okay. We are in the middle of a market maker's reversal pattern. And I don't know if it's going to play out. So I'm going to pull up my chart and share it with you because there's market maker reversal patterns inside of this PowerPoint presentation. And you're going to ask, why did he include those? All right. So we're going to take a look at SPY. Because a lot of times people are asking me, John, what is the market maker's reversal pattern? Okay, this right here. Okay, this is the support. See the peak goes up, another peak goes up. So this is resistance. Notice price got up there, price comes back. Price got up there, price comes back. Okay, so that's resistance. Price rocketed off of this support line, otherwise known as a trend line, okay, and rocketed up through there. Let me get my drawing tools so I can share it with you. And let's get this. I want the line, and I think I want that one right there. All right, so we fill this in with green. Okay, I want to fill this in. You can't see it, but we trade it up there. So we fill it in with green because the gap is to the upside. We closed here, so I fill it in like that. Okay. And if I look at that, now that I filled it in, we have an igniting candle. So the igniting candle goes up. All right. And it busts right through the resistance line. You see the resistance that shot price down twice? But the nice thing is they made a higher low over here. Okay, so now we have an igniting candle goes up right here, igniting candle. The next move after the igniting candle is the market is stunned. All right, they're just looking around. They're saying, oh my God, did you see that? What just happened? Did we just bust through resistance? This is crazy. What just happened? They're stunned. All right, you get the pause doji candle right there. All right, there's the pause doji candle. Now we get the pullback to support. Now, I really don't think we pulled back to support yet, but we did get to the halfway part of the 1 hour candle that happened a couple days ago. All right, but I was looking for 503.60 right up here, minor support. We didn't quite touch it yet, but after this pulls back to support, I'm looking for buyers to step in. And the crazy thing that happened today is buyers stepped in right here. So we found support on this line. And I'm not saying it shouldn't have happened, but it did. So we found support on this line, and I'm going to pan out to the 1 hour chart. So you can see we found support right here. That's not a whole lot of support. I was really looking forward to price action pulling back to 503.50, 503.60. But buyers stepped in here and rallied it up. So we'll see what happens tomorrow. But anyways, On the market maker's reversal pattern, go back to the daily, all right, the igniting candle, the pause candle, now the check of support. Now, I don't know if that was a check of support. I think it needs to come down lower, but they sure rallied it up today. Tomorrow's GDP, we'll know for sure. The next three candles after we check support, okay, are going to make higher lows and higher highs than the previous candle. Okay, so we got igniting, pause, pull back to support, and then we've got three or more price advancement candles to the upside. So it's possible we were up at 520 by sometime next week. We'll see what happens. All right, so that's what I see, the market maker's reversal pattern. So I'm going to share that with you right now. I'm going to drag the PowerPoint over there. It's included in the PowerPoint presentation. Okay, this is the market maker's bearish reversal right there, where they break through resistance and then they move down. And then this would be the market maker's bullish reversal. Price is coming down, we bust through resistance, and then we make higher highs up there. Okay, so that's in there. So that's what I'm looking at for SPY. Now, it doesn't mean it has to play out, this market maker's reversal pattern. They very well could consolidate to the right. They could make a bull flag and consolidate on top of support here. We'll see what happens. But I was looking for that to play out. Okay, so now I'm going to take questions. Oh, beautiful, beautiful. Oh, Malcolm, very nice. Did you guys see Malcolm's? Man, Malcolm, I just got to share that because that's just, I just love it. All right, see what he's done. He drew it in. All right, that's what it takes. You fill in the void of the bullish move. All right, the igniting candle. See that? Bull, igniting candle to the upside. Okay, then comes the yellow candle. See, it's the pause candle. So big igniting candle. See, ignition candle. Yellow one. He's boxed it with yellow. It might be black, but he boxed it with yellow, so you know what he means. All right, it's a pause candle. Price pauses because they're stunned. We move so far, so fast, we're out of breath. We need a rest. Okay, now price pulls back and checks support. Okay, so now this is the red candle. The back test, check the support. Because we just broke through resistance, now we want to check it to make sure it acts like support. So come back, check it as support, and then you get what he calls price expansion. I call it price advancement. Either way works. Both work great for me. The point is, each one makes higher lows and higher highs than the previous candle. So after we hit price support, that's what we're looking for. Really nice. Nice work, Malcolm. Thank you. Thank you for sharing that with everybody. So I'm going to look up ahead. Buyers did 1,300. End of day. There's Malcolm's chart. XRE. Any questions? XLRE and XLU are not in strong uptrends. Let's take a look at them. Mel, you're probably right. No, they're not. But you know what they are doing? That's a nice bull flag. See how it goes up and then it pulls back, and that ever so slightly pull back here. That's a beautiful bull flag. It's not in an uptrend, but it is consolidating over here to the right. Nice pop up, consolidate over to the right. Now, XLU, we're hardly in a recession, so I would really doubt that that's going to look good at all. Yeah, and it's just ugly. And we're not in a recession. It's It's not going to look good because we're not in a recession. The XLU is one of those sectors that only peaks, of course, when you're in a recession. You can see there's the proof right there. Thank you, Mel, for sharing that. XLE, that XLE is bullish, isn't it? I think I checked it earlier today. Daily. All right. XLE is in a bullish daily uptrend and it's at resistance. Okay. For me, if it gets on top, I'd like to play it. Other than that, I think there's greener pastures. That's what I think. I think you should probably find something that's easier to deal with. This is right up against resistance. I don't know about you, but 60% of the time, Rob, all right, 60 to 70% of the time when I buy right underneath resistance, I get burned. I don't even have a 50% ratio on that. When I buy right under resistance, I get burned. So sometimes it's better to let it get up on top, let it hold, and then buy it there when the buyers step in. Think about that for, a couple hours. See if you like that better than getting burned by resistance. The YouTube ID, yeah, certainly I can take care of that. Market laws. Let's go up here, all the way at the top. YouTube, right there. It's YouTube at Be Your Own Boss. B dash. You know what? I'm gonna put it in the chat. All right. I'll put it in the chat for you. If I can find it, give me just a second. I'll put it in there. So think about that one, Rob. Just wait till just be a little bit patient. I know you don't want to miss any of the move. Let it get on top, consolidate, and then wait for those buyers to step in. I think you'll have much better luck with that. And here we go. I got it. All right, I put it in the chat for you. All right. Roasted, how do I pick my options based on the ATR? All right, so I like to trade SPY. 50% of the 10-day ATR. Okay, if you don't know how to add the ATR, in TC2000, right-click, edit toolbar. All right, you hit the plus right here. Hit the plus, and then you don't even have to go anywhere. All right, you don't have to move the cursor. It can be over here. It can be on another screen. It can be down in this corner down here. You just type ATR. Okay, it comes up ATR daily, and you just select that, and it'll pop right up there. Watch if I select it. Okay, then it pulls up the parameters for it, and you just fill in the parameters, and it will add it. Just like that for TC2000. I don't need it, so I'm going to remove it. But that's how to add it. It's a 10-day ATR. So 50% in the money. So if this is 516, okay, and I'm looking for $2.50 in the money. All right. So if it's $2.50, I'll just round it up to $3. All right. So $3 in the money. If price action is at $7, then I want the 510 puts. And if I'm buying calls, price is at, let's say, $6. All right. Then I want the 506. Then I want the 503 calls. Okay. So $3 in the money. Expires on Friday. All right. That's what I like. $3. That's 50% of the ATR, roughly. Okay, $3 in the money. Price at 507. I want the 510 puts. If I want the calls, I want the 503 calls. Okay, does that, yeah, you take the ATR and divide by half. Yes, I want to be in the money by 50% of the ATR. XOP, is there a question in there, Starly? So we just broke this high. We made a higher high. We made a higher low. Now we made a higher high. Now we're dealing with, just like Rob's chart, Starly, you're dealing with the same thing. You're coming right into resistance here pretty soon. Again, like Rob, I'm going to give you the same answer. Why not just wait? Just be patient. Let it get up here and consolidate, and then wait for buyers to step in. You're not that far away. Again, I'm going to tell you, 60% of the time I get burned buying at resistance. Why not wait till it proves itself as support? Okay, for XOP. All right, just something to think about. Take a couple hours, think about that. Unless your track record's really good buying at resistance, other than that, why not just wait? There's plenty of other stuff to trade. And I know you're in my room, so we got plenty of stuff to trade. All you got to do is ask me for a trade. I'll shoot 10 of them off for you. Okay. Could I cover URA? Yes, Mel. URA. All right. It went through a magnificent uptrend. Let's just draw trend lines in. Okay. Okay. What do you see? Do you see a trend break there happening? It's close, isn't it? It's a possible trend break. Well, I definitely see a double top. Okay. I definitely see the double top here. And I think you'd be better served to find something different. Maybe like keep your eye on Amazon for an uptrend. I think that would probably reward you really nicely. Or Intel. Wait for that uptrend to develop for Amazon or Intel. I think you'd be better served by either one of those than to mess around with this with the double top. All I can see is a double top, a double bottom. For its future, I see a whole lot of consolidation in the future. That's all I see for that. That's a nice uptrend, and they're breaking through it now. Okay. I think keep your eye on Amazon. Already in a nice uptrend, kind of pulling back to support here. Maybe it finds support right here at the 8 EMA tomorrow. Let's wait for buyers to step in. We want those buyers to step in here. So we just made a higher high right here. Let's wait for those buyers to step in and nab it there. Right now, it's not ready. We don't even have, let's see what the 2 hour says. Yeah, 2 hours. 2 hour, we got a 2 hour bearish cross. Okay. Wait for that 2 hour bullish cross and then look for that 10-minute uptrend in that 2-hour bullish cross. You got the 10-minute uptrend, but we didn't get the 2-hour bullish cross. See, we're still underneath the 8 EMA there. Yeah, I like Matt's asking a candle to close above resistance. Yeah, not just a wick, Matt. Exactly. I don't want them to spike it or stab it. I want to see them get up there and hold. Exactly. Yeah. Yeah, I got Amazon up here now, Carol. You great minds think alike. Good to see you, Carol. I think it's getting added to the Diamond Dow. That's what I hear. That's what I read somewhere from one of my amigos. All right, any other questions tonight? Does 50% of the ATR work for all DTEs? Thanks. Jack, I'm a day trader. I'm not going to keep most of my contracts. Probably going to get how do I say it? I'm probably going to be I'm probably going to get rid of them before close unless the market closes at the high of day or at the low of day. So that 50% of ATR only works for me as a day trader. All right. That's it. Nice to see you. Thanks, everybody. All right. I hope I answered your question, Jack. Did I? As a day trader, that's the only reason I use 50% of the ATR because I just want something quick because I'm not planning on keeping it that long. I'm not planning on keeping it for 2 weeks. All right, everybody. Thank you. Have a wonderful evening. I look forward to seeing you all. Remember, I got open house tomorrow, 8 o'clock in the morning. Open house all day tomorrow. Thanks. Everybody have a wonderful evening.